So I'm going to dive into two different topics. I'm going to briefly talk a little bit about investors and my experiences of investments, and then I'm going to talk about kind of go-to-market and making it happen for your business to keep your investors happy. So first I'm going to talk about money, the thing that most people avoid talking about. But if you're looking at the wonderful world of investment, you're going to have to get quite comfortable with talking about money and having difficult conversations about money. So there's different types of investors that all have very different characteristics. I'm probably going to talk mainly about my experiences of working with venture capitalists, although I did have some investment in my previous business from private equity and from business angels as well. So the thing to understand is kind of how they work and how the finances work, and why venture capital in particular has this whole, you've got to be a unicorn, you've got to get this business to go to the moon, you've got to put as many rocket emojis as you possibly can on your pitch deck, you've got to really show them that upward curve and where you're heading to. And the important thing to understand is the metrics that sit behind it. This isn't a hard and fast rule, this is a generalization based upon statistics and evidence in the marketplace. I've tried to keep it simple because I'm not a maths person in particular. So if you've got an investment firm, and let's say they've got £10 million and they're going to invest in 10 businesses, they're going to give £1 million to each of those businesses. This is a venture capital firm. Their expectation is that around 90% of them are probably going to fail. They're probably not going to get a return from those businesses. So they're looking for one business that's going to be successful and get them at least a 10x return on their investment, but ideally somewhere closer to 100x. So that's what they're aiming for. They're not picking these businesses thinking, yeah, they're going to fail. They're picking them thinking, this is a great idea that has huge potential to deliver that return that I'm looking for. So if you're pitching to particularly a venture capital investor, you need to know that this is what they want. And I'm not saying you should go and pitch someone and say, hey, I've got this vision, I'm going to turn it into a £100 million business. I'm going to give you a valuation that gives you a 10 to 100x return. But if you're pitching anything less than that, they're probably not going to be interested. So I work with a lot of startup businesses and they go, hey, this is where we're at and this is where we're going to get to. And I go, that's great and that's really realistic. And I can see from where you are to where you're going. But from a VC's point of view, it doesn't hit the metrics. It's not what they're looking for. It's not the level of return that they're interested in. So you can, and I'll say approach with caution, you can reverse engineer the numbers and say, okay, I know what they're looking for. I'm going to turn that off because it makes my head go a little bit funny. You can reverse engineer the numbers to play into what that VC is looking for. The difficulty you have, after that trippy slide, is how. So you've got where you are, you've promised them a vision of where you're going to get to, but there's that gap in between of, right, well that's great, you're going to get to this valuation of your business, but how are you going to get to? So this is where I'm going to tell a little bit of a story and show a couple of examples. So I'll give you a little scenario. The year is 2021. I had a business that was doing pretty well. We'd gained some really good traction. We'd got quite a lot of customers on board quite quickly. It was pretty exciting. And we secured a significant amount of investment, more money than I'd ever dared to dream of in terms of investment, but I was quite naive. I'd done all right in business, I'd done pretty well. I'd bootstrapped businesses before and I'd grown them quite nicely to really good, comfortable lifestyle businesses. But I had this grand vision that I was going to take this business and it was going to be a global success and we were going to impact millions and millions of people, and had this really good story that we pitched to investors and we showed them the route to that return they want, unknowingly, because I didn't know these metrics that sat behind investment back then. So 2021, we had this money, had this chance for growth. Great, well, how are we going to do it? Now, you might be guessing from this slide that it didn't quite go to plan. We looked at all of the usual things. Right, we've got a lot of money, what are we going to spend it on? We spent it on everything and anything you can imagine. We did Facebook ads, Instagram ads, LinkedIn ads, Google ads, SEO. We had lorries with our branding on. We had the LBC radio advert that had the most annoying jingle you could ever imagine. We sponsored events. We sponsored magazines. We were in magazines. We applied for every single award you could ever imagine. We were everywhere doing everything we possibly could, wasting a huge amount of money. And by huge, we wasted millions of pounds doing the wrong thing, acting in the wrong way, trying to get from one side of that cliff to the other side of the cliff, and not really knowing what we were doing. So this is where we were at. We had some quite annoyed investors. We had Mr. Jeff Bezos taking many, many millions of pounds off us. We were spending a lot of cash to try and get this projected growth, but actually our spend was way in excess of our customer acquisition. It's great when you're acquiring customers and you think, yeah, we're going in the right direction. Then you start to look at the metrics and you go, well, actually, we're spending more acquiring a customer than we're actually getting from a customer. It's like, oh, it's all right if they stay with us for 20 years, we'll make our money back. But, you can't do that. It was unsustainable. We had to find a different way of being more efficient in our go-to-market. So this shocked me. 40 cents of every $1 of investment money goes to either Google, Amazon, and Meta ads. 40% of all spend. When you consider that there are billions of pounds worth of investment that happen every single week across the world, and this is a global metric, 40% is going to those ads, but yet still 90% are failing. So there's something wrong there, there's something amiss. And we were potentially going to be one of those businesses. We were shouting in this very crowded marketplace. I read a metric that you see between 4,000 and 10,000 adverts a day, which I found hard to believe until I read the metric, and then I started seeing adverts everywhere I go. And I wasn't counting them up because I haven't got that many fingers, and that number's way beyond my comprehension. But you see them everywhere, everything, whether it's in the newspaper, driving down the road, whether it's in here, you've got a Costa cup, you see absolutely everywhere. And it's very hard to stand out. As a company and as a brand, we were paying stupid money to align ourselves next to Coca-Cola, which just didn't make sense. Our brand was not something for everyone and anyone in the world. In fact, it was a procurement software. So it's not for everyone. It certainly doesn't need to be up there amongst all these brands. You can pay a lot of money to be in these places, but you can also waste a lot of money very, very quickly trying to be in these places. So we see these brands, we see these makes, these names, and Amazon, Microsoft, Google, Apple, and we buy from these organizations without giving it a second thought, really. And I want to know why. Why is nobody buying my brand, my product in the same, I say nobody, some people were buying it, okay, but not at the same rate and not in the same way that these brands were selling. And I was trying to think about this. I was like, why did I buy Adidas trainers? Because Adidas have never put an advert up that says buy these trainers, but I've seen them and I've seen their advertising, but it's not advertising saying buy this trainer, it's just brand, it's branding. It's trying to make me go, I associate with that brand, or I think that sports person's cool, I want to be cool, I'm going to buy those trainers. And my kids say it doesn't matter which trainers I buy, I will never be cool, but I will still aspire to try and buy something that I associate myself or want to associate myself with that brand. I drive a Volkswagen. I think it's really cool. Other people don't, but I associate with that brand in a certain way, and I have a perception of that brand that's built not off them saying buy this, but off the way that they've built their brand and made me recognize their brand. So how on earth could I do this without spending millions and millions on marketing? So you mentioned there, Peter, in the introduction that I'm a big fan of personal development. I'm constantly trying to learn something from anyone I meet, from books and podcasts. And I went through this period where I was saying we need to spend less on marketing, but we need to achieve more. How on earth am I going to do that? So I threw myself into this world of trying to learn, and I read every book I possibly could. I was listening to audiobooks constantly. My wife was knocking on the door when I was on the shower saying, who's in the shower with you? But actually it was just another audiobook I was listening to. I really threw myself into this to try and learn as much as I could. I was like, the answer must be out there. I'm a great believer that nothing is really completely new. Somebody's already done it in some way or in some sector, in some other way that I can adapt and learn from and bring into my own world. So I stumbled across this quote. What would it look like if it was easy? This is a quote by an author, an entrepreneur called Tim Ferriss. Tim Ferriss is the author of a number of very good books, The 4-Hour Workweek, Tools of Titans, and a couple of others. But I actually signed up to his newsletter, and it gave me this downloadable sheet, which is 17 questions you should ask yourself to change your life. I was like, oh, I'll give it a read. I said, what would it look like if this was easy? And he gave this example of where he worked in a contact center making calls. Just when he was a younger guy, earlier in his career, he said he'd go in and it was a real toxic environment where everyone's bashing away at the phones and you wouldn't put the phone down because that wastes half a second. You just press it and then press the next number. And he said it was absolutely mad. People calling and calling and calling. And someone said to him on his first day, the variable between your success and failure is how many calls you will make. So he's there and he's doing it. He's like, this is a nightmare. There's got to be another way. So he asked himself this question, what would it look like if it was easy? He was trying to get in touch with CEOs. He was sat there between 9 and 5 trying to call CEOs, getting stuck talking to gatekeepers who wouldn't let him speak to the CEO. So he's like, right, I need to do something different. If it was easy, the CEO would pick up the phone themselves. I wouldn't have to convince anyone else to give me the phone to the CEO. So he started working 7:30 till 8:30 in the morning and 5:30 till 6:30 at night. And he would make the call, and no one else was in the office, apart from the CEO, who would pick up the phone and say, hello, and he'd say, oh, is that so-and-so? He'd go, yeah, it is. Like, oh, fantastic. So he found a way that was easy, and he actually went on to become top salesman, and they're saying, how is he top salesman? He's never in the office. So I tried to apply this to my business and tried to work out, well, what would this look like if it was easy? If it was easy from a branding and marketing and sales perspective, the customers would come to me. I would stop having to spend money to try and bring customers in. They would just come to me. How could I do something a little bit different that would make customers come to me? So I stumbled across a thing called growth hacking. I was a bit confused. What is growth hacking? I can understand SEO, I can understand Facebook ads, I can understand advertising in a magazine because it's a thing. And I can say, hello, I would like one advert in your publication. I would like to do SEO advertising. I don't say, hello, I would like one growth hack, please. I would like one growth hack and it's going to cost me £1,000 and I would like £5,000 worth of customers back. That's not a thing. But I started to read more and more about growth hacking and trying to work out what it was and how it worked. Because growth hacking seemed to be a process that was working for a lot of very big and very successful brands. It was a way that they were trying to bring in a lot of customers to them by using a specific technique that worked just for them. And I'll go through some examples because I'm aware that's a little bit fluffy. It needs to be a bit more specific. So first I'll talk about where this growth hacking sits. So in the beginning, in my business, I sold to people I know. And I think a lot of people can relate to that. You start something up, a few people you know in business might be interested, might buy it. You usually know someone that has that problem and you go, yeah, I can start a business around that and I can sell it to those people. The next step for me was selling it to people that they know. Okay, you've bought this, do you like it? Do you know anyone else that might like it? And we were quite successful. So that we were probably about there when we got that investment. And what I was trying to do was get to here, sell to people that I didn't know. And selling to people that you don't know, selling them something that they don't know anything about is very difficult. If you see an advert for this water bottle, you go, it's just an advert for water. And then you'll see it again, and then you'll see it somewhere else, and you'll see it somewhere else, and you'll see it somewhere else, and it kind of gets into your subconscious. Then you might see it in a shop after seeing it in an advert 20 times and go, oh, there's that water, I'll give it a go. It's much easier at this point where if you'd said to me, this water's brilliant, you should try it. Oh, great, I'll give that a go. But this, number 3, was incredibly difficult. And number 4, right up at the top corner, brand, just seemed like an impossible place where I didn't feel I would ever be able to get without spending an ungodly amount on marketing. But growth hacking seemed to fall into here. It's not something that's easy, it's not something that's quick, but it's something that works and is sustainable. It's not spammy tactics, it's not a silver bullet, it's not something that's a one-time hit. It's trying to build something sustainable that long-term brings customers into your business. So, I don't expect you to read all this because I'm going to explain it. I say that every time, and every time I say it, I think I should remove that slide. So the first step of it is to really understand your customer. Who is your customer? Who is buying your product? I went to Crafter's Companion, Sarah Davies from Dragon's Den. I went to her office space pre-Dragon's Den, and she did a great talk where she talked about understanding her customer. And she'd profiled exactly what her customer was. So her customer, she had two different profiles of customers, but her main customer, they even give her a name. They called her Jean. She was of a certain age. She had a certain way that she liked to pay. She was a bit skeptical of paying online. She preferred to buy in person, or she quite liked to write a letter and send an order in. They knew what she liked to buy. They knew when she liked to buy it. They knew what kind of branding and appearance she wanted of that product. And I tried to do that for our business. Who's buying it? When are they buying it? What are they buying it for? And my customer had all of these answers. I just had to ask them, why are you buying this? Why did you not buy a competitor's product? You bought it this time of year. Why did you buy it at that time of year? What was the problem that you think we're solving? And trying to understand my product, not from my perspective, because I have a perspective of what my product is, but what's more important is my customer's perspective. So we quite often go about trying to describe our own business and our own product, but how would your customer describe your product? And how your customer describes your product is what it is, not how you describe it, how they would describe it. So if they say, oh, it's a solution that does this, that, or the other, then that is more important than me thinking, oh, my product is this, because I'm biased, because I love my product, because I've put my heart and soul and effort into my product, so I'm not talking about my product in the way that my customers are. I'm talking from the perspective of someone who's in love of my own product. Whereas your customer might not be in love of your product, they just solve a certain problem, and that is important to them. The next step of the process is understanding if it's just one person that buys your product or service, or maybe it's more than one person. Maybe you've got a product where someone needs it, but actually it's someone else in the business that buys it. So it's not always the person that uses a product, particularly if you're selling something like software. There's going to be end users who use your software who will get benefits from it, but they're not going to necessarily pick up the phone and make an order. It might be a finance director, it might be an operations director, it might be someone else. So trying to understand this from your customer's perspective of why they're buying, when they're buying, what's the problem you're solving, but also who's buying is really important. And this is something that I hadn't gone through. This is a process that we hadn't done. And the right time to buy. It's not always the right time to buy. I'm sure you've all heard it a million times. Oh, we'd love this, but it's not the right time. But if you can understand the timings of your customer and when your solution fills their need, you can be better placed to sell to them. I went from running a bid writing consultancy, which I thought I was excellent at selling. I thought I was brilliant because someone would come to me and they'd say, we've got this bid we want to work on. Can you give us a quote? And I'd give them a quote and I'd go, oh, the deadline's in a month. I was like, great. If you want to do it, you need to tell us in the next 4 days so we've got enough time to write the bid. And there was that time pressure. So people were buying from me and I thought I was good at selling, but actually it was the time pressure because the timing was right. Whereas when I moved to my next business, which was a software solution, there was nothing necessarily that was giving that time pressure. And I was getting frustrated because the time frame of sales was often, I'd talk to someone, they'd say, yeah, I want it. And then 6 months later, I'd be like, well, why haven't they bought it? Well, it wasn't the right time. There wasn't that pressure. There wasn't that thing that made them, tip them over the line to buy it. So the next part of growth hacking is, okay, well, if you've profiled this person or these people, where can you find the largest group of those people possible? You can sell one-to-one to someone, but it's much better to sell 1 to 100,000 people or 1 to 100 people, or maybe even 1 to 5 people. So how can I find those groups, those communities of those people? And then the final part, I've just said, how can you find those people and sell to them? But how can you find them and not sell to them? How can you find them and deliver significant value to those people to help them, to give them something, some advice, some guidance, some tools, some information that raises your profile and makes them want to come to you when they have a problem that it's solving? So you're not going to them and saying, hey, buy my product. You're not going to find a group of 100 people and just go, buy this, buy this, buy this, because we don't like to be sold to. But if I found a group of those people and said, oh, here's some tools that are really useful. Here's some information that's really useful. Here's some blogs that are useful. Here's a video series of explaining how you do this, which I know is a challenge for you. Or here's some examples of how someone else has done it. Or here's a podcast with someone else in the industry, not necessarily me. I can be the host because that raises my profile by being the host, with some information which I think you'll find useful. And trying to find a way that through your in-depth understanding of your customer delivers real value to that group of people. So that's a long-winded way of reading those slides. So I'm going to give you some examples. So there's a podcast called 20VC. 20VC, you might have listened to it. It's got 100,000 monthly listeners. A guy called Harry Stebbins, he was 19 years old. He wanted to get into the world of venture capital, and he didn't have the connections. He didn't know anybody. He hadn't gone to the right universities and built the right circles. Just a normal guy that had an interest in something. So he started this podcast, 20-minute podcast, 20 minutes with a VC. He rang up VCs and said, hey, I want to learn about how you select the companies that you're investing in. Can you give me 20 minutes on a podcast? And we all like to talk about ourselves, and people would say yes. If he'd have rang them up and said, can you teach me about being a venture capitalist? They might have said, oh, no. But if he rings them up and plays to their ego, can you tell me for 20 minutes on a podcast about this and we'll put it out to the world? Yeah. So he got his foot in the door with a lot of people that he was keen to talk to. And then he took these podcasts and he started clipping them up, the best bits, the best clips of the discussions, and posting them out on social media. And his profile went from a young guy with no experience to someone that's considered one of the leading voices in the industry, not because he's an expert, although you could argue he is an expert, but because he aligned himself with people that had a significantly higher brand and reputation. His last investment for round, he raised £400 million worth of investment. He's 28, which is a significant amount of money from someone that didn't come from the industry, because he's gone out there and he's delivered value to the community. He's built an audience. He's built a community around not selling from them, around delivering significant value. So the next two examples I'm going to give are very opposite ends of the scale. So I'll keep you waiting on OnlyFans, and I'll talk about PayPal. So PayPal in the early 2000s had this scheme, which I thought was excellent. At the time, I was a student at university, and it said if you refer someone to PayPal and they sign up, you get £10 and they get £10. Let me tell you, me and my friends at university had this windmill scheme of referring each other to PayPal accounts, and it paid for more nights out than you would believe. So they had this scheme, and people were referring, oh yeah, I get £10 of free credit, and all I have to do is put in the email addresses of some people I know, and I can earn hundreds of pounds. They actually capped it at £100 eventually, probably because students like myself were maybe taking advantage a little bit of the scheme. But PayPal was acquiring customers like you wouldn't believe. They spent $60 million in giving away credit, but the credit was on their platform. It was hard to get it out of their platform, unless you were a student with lots of time who could work out how to get the money out of the platform. So you had to use their platform to buy something. They aligned themselves with eBay, so it became credible. And they grew to 46.6 million market cap. So you might say, well, I don't have 60 million to give out. But if you had a credible route to market that would grow your business this big, you would have a line of people around the block waiting to give you 60 million for a piece of your business. And you don't have to immediately go out and say, hey, I need 60 million because I've got this great idea. You can test it. You can test these kind of referral schemes and programs. Is there a way that you can incentivize your existing customers to create more customers, whether it's giving them a share of the revenue, whether it's giving them a percentage off what they're buying, but making it compelling enough to make them go, yeah, I'm going to open up my network to you and refer your business to other people. So OnlyFans is very different from PayPal. I always try and be careful how I word this description. So OnlyFans, I'm sure most people are aware of, is a space where you have content creators who create content that people pay a subscription to access. In May of 2020, they were acquiring 150,000 new creators on the platform every day. And the way they did this was they said, if you refer someone to the platform, you get 5% of their revenue for life. So you'd have someone on the platform who had quite a big audience and was getting a good income, and they go, actually, my friend has a really big audience and will draw a really big crowd. I'm going to encourage my friend to sign up, and we take 5% of their revenue. It got so popular that they actually said, you can't have 5% of their revenue for life. We're going to limit it to 1 year. That scheme, OnlyFans released a report which was very sketchy on the detail because they didn't want to reveal how many, but they said they have created multiple multi-millionaires through their referral scheme. And it really worked. It took off hugely. So Hotmail, in the beginning of the world of personal emails, they did a simple thing. They were spending a lot of money on advertising, marketing, trying to get seen. It wasn't really working massively until they did something really simple. Back then, I'm sure a lot of you can remember, people wanted personal email addresses. You could get work email addresses, but the thought of how do I get an email address was really difficult. They introduced a footer on the email, which was quite unheard of at the time, which is, P.S. I love you, get your free email at Hotmail. You click on that link and you can sign up for a free email account. That grew exponentially, and 18 months later, they got acquired by Microsoft, just through a simple hack that created some virality. Often people talk about being first. Why is your business going to be the best or going to be the biggest? Well, it's because we're first. Google weren't the first. Alta Vista, Ask Jeeves, poor Jeeves, no longer about. But I do think we're going back to a time where we are a little bit asking Jeeves, because we're all now asking ChatGPT. It's just a different name. Jeeves was maybe ahead of his time. But Google focused on customer. I remember in the early days going on Google and you'd ask it questions, you'd do a search. You wouldn't ask it questions, you'd ask Jeeves a question. You'd just put in a search for Google and it would come back and say, is this a good result? And I remember getting annoyed. Yeah, it's a good result, leave me alone, I want to look at it. But they focused on customer and product. They asked, is this a good result? Is this what you're looking for? They did that part one of those steps, which is getting to know their customer. And at the time I found it annoying, but actually for them, it really helped them focus on getting the right results for the customer. Ask Jeeves, I was asking him questions, but Jeeves wasn't asking me anything. It was just throwing me back stuff that wasn't quite what I was looking for. So a lot of these search engines disappeared on the basis that maybe they didn't quite know their customers. And they had a very simple thing. So I remember on Alta Vista, it had this thing where it was make Alta Vista your homepage, but you clicked it and it gave you a downloadable PDF, and you'd read the PDF and it would give you instructions of how to make Alta Vista your default homepage. Google had a button that said, make this my homepage. You pressed on it and you said, do you want to make Google your homepage? And you pressed yes. So it was simple things. It wasn't always the most complicated things that businesses do that create the growth. And things like that arguably created more growth than the marketing and sales activity that they did. I think community plays a big part in this. I've talked about trying to understand your customers and trying to build a group of those customers and trying to deliver value to them. I'm getting invited to more and more WhatsApp groups. So products I buy will say, well, why don't you join our WhatsApp group? And then they'll have information, and then they'll have an event section, then they'll have a question and answer session. And they're creating community, they're building community. And those products to me are keeping at the front of my mind, but they're also delivering value to me and raising their profile through sharing useful information. You might have heard of the example of Wall Street Bets. There's a company in America, well, mainly across North America, called GameStop. GameStop was a computer game shop, and it was going out of business very, very rapidly. The kind of death of the high street had really hit them, and they were going out of business. The private equity firms took a bet on their share price dropping, and they put loss orders on the shares. So if that company had gone out of business, they would make a lot of money through betting on the stock market, essentially. This group, Wall Street Bets, which has 18 million people in it, didn't like that. This is a Reddit community, and Reddit is very much a technology-based kind of community, and they had fond memories of GameStop. They didn't like the fact that these private equity firms were set to make billions of pounds on the downfall of GameStop. So they started buying up the shares and boosted the share price massively, and the private equity firms were losing millions and millions, to the point where some private equity firms were worried that they were going to go out of business. Community came together for a purpose that they were passionate about and did something about it. A really geeky example, I used to play this game in 2001, 2002 called Football Manager. They've still got a community on Facebook with 47,000 people in it. There's a guy that runs that community that sells mugs with the players' names on it, he sells t-shirts, and he sells USB sticks where you can play a cracked version of the game with the new players rather than the 2001 players on it. Community and finding people that are passionate about what you do and delivering some level of value has a real big part to play. And I think there's lots of businesses out there that can create that community or find that community. So the end goal of every growth hack is to build a self-perpetuating marketing machine that reaches millions by itself. So what I'm trying to make you think about is, if you've got a business, a product or a service, there will be a way that you can reach customers in a different way. It's not going to be simple. It's not going to be as simple as going, I want to buy that product or service that's going to market my business. But I'm hoping that you can leave here and think about, what can I do that will understand my customer, deliver value to my customer, but bring my customers into my business rather than it always being outreach. If you can build something that gives them value, whether it's financial return through a referral scheme, whether it's a community, whether it's even a podcast, something that delivers value to your community. I work with companies across a whole range of sectors to try and help them understand what that is, to develop strategies, and then to deliver on those strategies to try and build sustainable inbound marketing. It's not to say that traditional marketing doesn't have its place. If you actually go through those growth hacking steps, you might find that actually it's not a growth hack you need, it's Facebook ads. It might be more traditional marketing routes, but there will be a way that you can do something that helps you micro-brand to a small group of specific and relevant people, rather than trying to shout up there alongside the likes of Coca-Cola and wasting millions of pounds. We used this method in my previous business, which grew to 3.5 million monthly active users with zero marketing spend and 55,000 daily active users on the platform. So I'm speaking from a position of experience, and then I've used this model with multiple startups to try and help them build these sustainable methods. So I hope today you can take this away. I've only overrun by 2 minutes. So thank you for your time, and hopefully it's been a useful session for you.